Bitcoin holders, history could be repeating itself right now. If you've been in crypto long enough, you'll know that massive corrections happen in the market, even during bull market cycles. All kinds of economic scares can happen on our way to ultimate all-time highs for a market cycle. These corrections, of course, are designed to shake people out before pushing us on to higher highs. But every once in a while, it's just the end of the damn bull market. It's over. Now, are we just in a shakeout currently? Well, we're seeing some eerie similarities to past cycles. So in this video, I want to break down the patterns that played out in 2017 and 2021, how they're unfolding again. The big question that every crypto investor is asking right now, have we hit the top? Is it over? Did we miss selling? And we're going to have to basically face 4 years of eating shit again. Or does this bull market have room to grow? Well, let's compare past market corrections with what we're seeing today, because corrections, of course, are the price that you pay for the exponential returns in this cryptocurrency market. Okay, just remember to take profits next time the market's pumping. Now, this is where a lot of people are going to get shaken out of the market, and for good reason. It's been super fucked up recently. Let's just keep it real, okay? And we're basically at some kind of mid-cycle mini bear market period. Now, investors often panic at the first sign of red candles, and sometimes he who panics first panics best, especially if we're entering a bear market. But when the market turns from greed to fear, a lot of people tend to sell the most inopportune time right before markets rip higher. Now, we all want the market to rip higher soon, but if macro gets worse, it may not. But history proves that Bitcoin's bull runs can include anywhere from 4 to 8 major price corrections before reaching a peak. During 2017's bull run, Bitcoin had 7 major corrections ranging from 27 to 41%. And after a 35% drop, by the way, Bitcoin rallied a further 320% to its peak in 2017 up to 20K. Now, each time Bitcoin recovered and ran higher until it reached its peak. Bitcoin followed a relatively similar pattern in 2021 with 6 major corrections ranging from 17 to 55% to the downside. The bigger the wipeout in the last cycle, the higher the pump. And one of the biggest wipeouts was due to China's crypto mining ban and the macro uncertainty surrounding the pandemic at the time. But even then, Bitcoin recovered and it ran higher. In 2021, Bitcoin dropped around 33%. It was followed by a 280% rally. That was then. What about now? Let's talk about 2025. So far, Bitcoin's biggest pullback in the cycle was around 26% in August 2024. Of course, that was around the yen carry trade unwind. Essentially a minor shakeout before the all-time high of $109,000, although it felt like the world was ending at the time. The correction you're witnessing right now, only 28%. Pretty brutal, at least at the time we're recording this video. It might be down further by the time you watch this. So these are the kind of corrections that make you question everything. But compared to previous cycles, this is still a relatively normal and mild mid-cycle correction. History goes to show that 20-30% corrections in a bull market are relatively normal, and sometimes they can even be as big as 50%, which is insanely brutal. And look, corrections are rough. They're smack you in the face, kick you in the balls, but they do clear the way for the next leg up. They remove a lot of the leverage and greed in the market. Every single Bitcoin cycle has followed this pattern, yet people, of course, will obviously panic when this happens because it is freaking terrifying, especially for altcoin bags. But if history tells us anything, we could still see 1 or 2 major corrections like we're currently experiencing before the true top is in for this market cycle, because every Bitcoin bull market will eventually meet its death. But I want to take a moment to let you know how you can get $50 for free with Femex, one of the top crypto exchanges. Look, markets go up, markets go down, but you can trade both ways and make money both ways. Even if it feels a bit dirty making money shorting sometimes. And the OG exchange, Femex, is a great place to do it. It's available to everyone, everywhere. It has deep liquidity, all the top trading pairs, and currently they're running a crazy promotion that you may want to take advantage of. So you get $50 for free just for signing up using the link down below. You'll get a 20% deposit bonus. So you deposit $1,000, get $200 back, as well as a $1,000 trading bonus. Pretty damn cool, right? All you have to do, use the link down below to start your account, and you'll be eligible for all of those bonuses. Go check it out if you're a trader and you want to be trading in the markets and taking advantage of that offer, but also of all the trading opportunities available. Let's get back into this. A little more history here. In 2017 and 2021, the bull markets ended in pretty spectacular fashion, and there's a key reason why. Changes in liquidity killed the momentum. Macro came in. A bull market, of course, dies when there's no fresh money left to buy. So watching the macro environment becomes very critical. We've had a lot of bad macro news recently, but also we had markets rally to $109,000 with high rates and the Fed tightening and all that stuff. But things like a weak economy, the tightening of the money supply, by the way, global M2 is going up right now, rising interest rates, all that stuff signals that things are about to change for the worst. Yeah, we still have rate cuts likely coming this year. Meanwhile, in the market, retail investors will FOMO and buy the top. Whales and institutions begin distributing their holdings. With no new buyers, prices crash. In 2017, the ICO bubble burst as regulators stepped in. China banned ICOs. The SEC started going after projects for selling unregistered securities. All kinds of crazy happened. The launch of CME Bitcoin futures in December 2017 basically marked the exact top for Bitcoin. Now, some believe institutions shorted Bitcoin into the ground, which effectively some of them did. Once Bitcoin hit $20,000, there were really no more buyers left to sustain the rally. Too many sellers, not enough buyers. The hype cycle died. That was it. By December 2018, Bitcoin's price had dropped 73% to around $3,000. Then in 2021, it wasn't ICOs that crashed the market, but instead it was NFTs. JPEGs of monkeys selling for millions of dollars, DeFi protocols with 10 million% APY. Things got pretty crazy, man. The pandemic stimulus, of course, was the perfect setup for a massive liquidity-fueled bull market, but also a perfect setup for huge runaway inflation and an unstable economy, which led to massive rate cuts and an unwinding of all this stuff. But unlike in 2017, big money started entering the space in 21 with Tesla, MicroStrategy, and others buying Bitcoin for their balance sheets. We had El Salvador becoming the first country to make Bitcoin legal tender. We had the Coinbase IPO. A lot of exciting stuff happened. With hindsight, all this euphoria signaled the top. The 2021 bull run sent Bitcoin from $10,000 in late 2020 to $69,000 by November 2021. Then, of course, another brutal bear market crash happened and a basically year-long unwind. The explosion in liquidity was also the perfect setup for a massive liquidation cascade, which sent prices just plummeting down. On the macro front, inflation had spiraled. Central banks needed to pivot from money printing to raising interest rates and tightening their balance sheets, crushing risk assets like crypto in the short term. That was the start of the true bear market, and Bitcoin slowly crashed to sub $16,000, marking the bottom in November 2022. History, of course, shows that every major Bitcoin crash comes when investors are most confident that the price is going to keep going up, when price targets keep going up and up and up and up and up. The warning signs are almost always there, but investors usually ignore them, apparently including me half the time. Shit. This time around, of course, the tariff wars are freaking the market out, kind of like they did in 2018. We had the Trump meme coin launch, massive media attention. There were certainly some signs there, but none of the major indicators, technical or on-chain, were really flashing market top. So what's happening right now is kind of like a bear market, but like a mid-cycle bear market within a wider bull market cycle, which could still end with Bitcoin going anywhere from 150 to 250K by the end of 2025 or sometime in 2026. Eventually, macro will swing back in our favor in a very violent way, sending markets raging higher. The market structure, though, is evolving in crypto. The biggest change, of course, now is that there's a lot more institutional involvement, thus meaning our correlation to stocks is higher than ever. Spot Bitcoin ETFs have brought in a flood of institutional money. More corporations than ever are adding Bitcoin to their balance sheets. Regulation at the highest levels. Governments openly discussing Bitcoin as a reserve asset. BlackRock, the largest asset manager in the world, of course, has officially been orange-pilled, adding their Bitcoin ETF to the markets and seeing $150 billion model portfolio actually going to have Bitcoin allocation. The BlackRock model portfolio actually going to have 1 to 2% Bitcoin allocation now. Things are happening at the wildest speed. It is the most wildly bullish bear phase in any market I've ever seen. Now, it might not sound like all that crazy stuff, but there's so many stamps of approval, so much social proofing, so much institutional adoption. It's crazy. And let's not forget, Trump just confirmed the USA is going to have a crypto reserve, including Bitcoin, Ethereum, Solana, XRP, Cardano, potentially a few other coins. Made in America coins are probably going to have no capital gains tax. Bitcoin's going mainstream. So unlike in past cycles, whales aren't just selling to retail anymore. They're selling to institutions and governments. This could smooth out volatility or make the eventual crash even much more brutal than before. Now, a side effect of crypto going mainstream, of course, is our increasing correlation to macro and equity markets, as mentioned. So when economic conditions or the business cycle or whatever it might be starts heading in the wrong direction, you bet your bottom dollar that crypto is going to follow right along. Now, that's always been the case to an extent, but it's becoming even more acute than before, with crypto being massively reactive to any slight correction in the equity markets. So where are we in the cycle? History says we're in the later stages of a bull market, in spite of the fact that it may not feel like it right now. And hey, maybe it is over. We'll see how it plays out over the next few months. Chances are we are in a massive sort of mid-cycle bearish period as has happened so many times in previous cycles, and that there's probably still plenty of upside left before the cycle top is in. The business cycle's not looking all that bad. M2's still printing. Rate cuts are coming, all this kind of stuff. So we're likely in a distribution phase of the bull market. A mid-cycle crash, much like we had in 2021. The stablecoin index suggests that there's still a lot of money on the sidelines too, meaning that there's a lot of room for the market to grow. And that big pump we had on Sunday shows that there's incredible risk appetite as soon as risk attitudes turn around. Markets will pump super fast. So there's room for the market to grow. There's demand for these assets when risk-on attitudes are there. Stuff like the Pi cycle top indicator hasn't even flashed yet. Again, a lot of technical and on-chain indicators have not shown a cycle peak. Maybe that stuff's all wrong though. But still, we have a US crypto reserve. Could mark the top when it officially launches sometime later this year. So look, the top will come eventually. Local top, obviously, in December or early January at 109. Hard to argue that at this point. Still looking for a potential market top 150 to 250K sometime later this year. Okay? So when it comes, be ready. Okay? Don't be caught FOMO buying at the top again. You don't have to nail the exact top to win in this game. You just have to be smart enough to take some damn money off the table while there's still liquidity, which is not today. By the way, it's been pretty rough. Until that next phase happens, you may have to eat a lot of shit. Let's keep it real. And your patience will be tested. Time-based capitulation is a real thing. But if you can survive, you'll need to survive. Remember, markets can remain irrational longer than you can stay sane or solvent, okay? So don't lose it all trying to take on too much leverage, trying to revenge trade. These are some really rough market conditions to try to trade in. You can wait for better market conditions, preserve your capital until that happens. Okay, that's it. Thanks for watching.